How's it going, guys? Hope you're all well. Welcome back to another video. As you've probably noticed, I've not actually uploaded for a while, and just for the simple fact is I've been working on myself, working on my own trading, and getting my trade plan to a point where I'm happy with it, and to a point where there's no real guesswork, and I can just say this trade fits the plan or whatever. I can just hit the trade there and then, and that's what I've been working on. So yeah, sorry for not uploading. But here I am with another one, and in today's video what I want to go over is just how I personally backtest a smart money strategy. So what you will notice when people trade smart money, they will not actually backtest bar by bar, and this is something that I actually do agree with. Sometimes what I will do is I will backtest bar by bar, and I usually do this at the end of the week. So what I'll do is I'll go over the last week's price action, and I'll take it day by day, and I'll go through and backtest bar by bar. But a lot of the time what I do is I just do hindsight backtesting. So for example, what I will do is I will get obviously a chart, get the the price action that I want to backtest, and then I will simply go through and then I will mark up obviously my structure points. So if I'm just going through, just mark up all of my structure, and then once you do this, what you can do is you can then start marking out obviously your supply and demand zone. So obviously we've got this price action right here and break up, and then it looks like the next break would be once we break this low right here. So these are my structure points on this bit of price action, and then what I would do is I would just simply find the supply and demand zones where I think there might be a good opportunity from. So for me, off the top of my head, what I can see is maybe something around here and doesn't tap in, it comes up, there might be a trade here, possibly a trade, doesn't tap into that, but it taps into this sort of sell to buy. So there might be a trade from here, part of this sort of demand chain, and it looks like we going from mitigation to mitigation. So there might be a trade from around here, and just make sure obviously you're marking supply and demand zones within your trading hours. So for me, I trade 7 till 10 and then 12 till 3. And what I've noticed here is prices come up, it's had a change of character, it's started to come down. There's no real clean supply zone around here, so I wouldn't actually be interested in taking a trade from around here. But what I've seen is obviously prices come down, it's swept all of this liquidity below here. So we swept a lot of liquidity, it's tapped in to sort of this demand area right here. So we've tapped in to this demand. What you could do is you could sort of refine it. You could maybe drop to a lower time frame and refine that if you wanted to. But yeah, this looks as though these are sort of the areas that I would be looking at. Is this in my trading time? Yeah, it's coming into sort of New York. So I would be happy to take a trade around here. It looks like there might be some sort of loss up in here, but then you might be able to catch a winner. And then what I would usually do is I'd usually take this little circle tool, and I would just mark out sort of the areas where I would look to take a trade from. So I'll just circle up, and then obviously circle, and then again put on my circle over there, and these are all the points where I'd be looking at a trade opportunity. So once I've obviously marked out the areas that I might be interested in taking a trade in, what I would do then is I would drop down onto a lower time frame, and then I would start seeing if there is any way I can get into the market. Obviously at the moment my trade plan back in the day was actually a lot more lenient than what it is now. So at the moment I do look for specific things in order to get into the market, but I will go through and I will just see what we can see. So what you will notice is we've come back down obviously into this demand. Obviously I've not gone over all the confluences and the reason why I've chosen these demands, but the point here is just showing you how I would do it. So as you can see, this is the first tap into this demand. We obviously have a change of character to the upside, and then price just pretty much leaves and doesn't come back. So at this moment in time there wouldn't actually be an opportunity to get involved within the market. So if you want to, and you can go ahead, start deleting these if you want, and just keep your chart a little bit cleaner. So then we come up, we come back down, we tap in to the obviously demand zone, and what you'll notice here is we get a chalk. So we've got a chalk, price then comes up, it taps in, we get a flip, so it comes in to this sort of supply. So if I just mark that out for you guys, if you don't actually know what a flip is. So it taps into this supply, gets a reaction, and then carries on. So what you could do is you could set a trade around this demand area right here. So that would be completely valid to take a trade from. According to my old trade plan, this might not be something that I would actually take at this moment in time with my new trade plan, but you know, this is something that a lot of people will trade like. So you could go ahead, you could cover this low if you want, but for me, I would just cover that low right there. And then what I would do is I would record things like, obviously, the stop loss size. I would record things, are we entering from the extreme, are we entering from the flip. Also stuff like, does this trade reach 5R? So, you know, if I target 5R, does it reach 7? Does it reach 10? You know, what's the maximum of the trade runs, stuff like that. So obviously, you know, on average, how far your trade runs, on average, how big your stop loss is, all things like that. And it's all things that you need to be gathering data on and things that you need to be noting down, because it's really, really important when it comes to trading. So this right here would be entry number 1. So entry number 1 obviously is a beautiful trade. You know, we get involved on the flip zone and it could run up to a peak of, well, to be fair, it runs very, very high. So if we actually held this trade up on towards here, you know, 25R there with a 4 pip stop, which is absolutely insane. So as you can see, we come back down here. So you could delete all this if you want to. Obviously take screenshots and enter it into your journal first before deleting anything. But you know what you will notice is we come back down into this demand. We do get a change of character, and it actually looks like there's not, you know, another opportunity to get involved in here, which is absolutely fine. You don't need to be involved in the market in every single trade. Obviously, if you caught this trade here, the likelihood is you wouldn't actually be taking a trade here anyway. But what I can see is we come down, we get a change of character, you know, price wicks back down into, you know, sort of this area here. But what, you know, you will probably be looking at something around here maybe, and actually price does not come back down to tap you in. We come up, we get a tap, well, actually it blows straight through this supply. Yeah, there's nothing too clear for me, and something that, you know, I've actually found is what I would do back in the day is I would actually chase price on the 1M. But, you know, these days what I'm doing is, you know, if price doesn't come back to my entry, I'm just leaving it and I'm not getting involved, because, you know, what you'll notice a lot of time is if you're trying to follow price up on the 1M right here, you know, a lot of the time you will end up taking a lot of losses, and that's something that I've actually cut out of my trade plan myself. So following on, what you will notice is we don't actually get an opportunity up until around here. So we come down, we get a change of character. You know, you might enter it here, so this could be a valid loss if this does fit your trade plan. So we'll come down, we'll probably take a loss right here. So let's just mark that on the charts just for the sake of it. So covering the low, you know, I cover the low by, you know, half pip, 1 pip, whatever it may be. In the end anyway, this would be a loss, because, you know, most people would go break even somewhere around here. And continuing down, we come down, you know, we get another change of character. So this price action here is not actually very good, because you might end up taking a lot of losses before getting involved in the market right here. But for me, this doesn't actually fit my trade plan. Coming down, so change of character, probably a loss. Another change of character, you know, you might take another loss there. You know, this is one of the reasons why I have been digging into my, you know, my data and, you know, switching up my trade plan a little bit, because back in the day, what I would do is I would literally just keep hitting these, and I had a maximum, you know, loss of 2% per day, and, you know, I probably took, you know, 1, 2, 3, maybe 4 losses in here if I was risking 0.5, and yeah, that's one thing that is, you know, quite difficult when it comes to, you know, trading the smart money style and trading, you know, sort of the way that I used to trade. So yeah, what you will notice is, you know, loss 1, maybe a loss 2, loss 3, and then you might actually get involved in the market somewhere down here. So you get a change of character. You know, if you trade inside bars, this would be, you know, your change of character here. So yeah, this would actually present an entry. So you could enter somewhere around here. Entry there, stop low the low, you know, whether you cover it by 0.5, you know, maybe 1 pip, whatever it may be. And then obviously enter in and, you know, record the data such as stop loss size. Does it reach 5R, 7R, 10R, 15R? all stuff like that. And this is the overall process that I would do when it comes to backtesting. What I do is I go through and just do hindsight backtesting a lot of the time, and then, like I said before, at the end of every week I will go through, every single day, so Monday, Tuesday, Wednesday, Thursday, Friday, and I will backtest each day in bar replay and see if I can catch the trades that maybe I've missed or maybe I've taken during that week on bar replay. And it just trains your eyes to see it in sort of real time. But in this certain situation here, you might have taken 1, 2, maybe 3 losses, and then you might have got involved in sort of a 10-hour trade. And this is something that you need to be looking at within your trade plan. Are you happy to take 1, 2, 3 losses before hitting a big winner? If you are, then that's absolutely fine. And what you might want to do is you might want to, tweak your trade plan if it does make sense in order to, maybe avoid this loss and maybe a loss down here before hitting this one right here. But if you're taking this trade here, the chances are you're probably taking this trade here and maybe, this trade and this trade. So this is all stuff that you need to be logging, stuff that you need to be entering into your backtesting journal and just digging into when you feel like you need to. So this is the overall backtesting process that I would do, guys. Obviously, just go through, mark out your structure points, mark out your supply and demand zones, put a little circle where you think opportunities may come. Make sure you're obviously doing this within your, trading times, unless you're just gathering data. But this is the process that I go through personally, and it's a process that I think does help me, ingrain the, my setup into my head, and it's something that does benefit me in the long run. So that's just about it for today's video, guys. If this video did help you out, please leave a like on today's video, and I'll see you in the next one.